Thank you so much for your time today, Opeyemi. And let's start first with your overview of the brewers in Nigeria and how they've all kind of worked to respond to the pandemic.
Yeah, it's been a very challenging environment for them. Most especially, the pandemic brought about the closure of, on-trade channels where they sell about 60 to 70% of their products. These have slowly opened back up, and we have seen a recovery in top line, strong double-digit growth across the sector over the last 2 quarters, which is quite, it's quite encouraging. So what, going forward, the strategy now is to try to take price where you can. Inflation at 20%, it's very tough for them to increase prices above inflation. Wherever they have the opportunity to, they can do, mid-single digit price increases just to cushion the effect of cost pressures on their margins.
Right, but still looking at the impact, though, I'd like you to speak to what we're seeing play out, because I understand that that is a very competitive space, like you alluded earlier, talking about those price adjustments that are going on currently. But I'd like you to speak to the issue of competition and also the market segmentation, and are we seeing changing the dynamics there?
It's the situation is very similar to what happened in 2016. I think it's intensifying in the sense that the middle segment of the market is slowly disappearing, and a lot of the competition is now in the economy segment of the lower end, of the market. So these are the low margin products, and international breweries and Nigerian breweries are playing aggressively in that space, trying to win in terms of volume. At the top end as well, both companies have a premiumization strategy. So they are looking at the likes of Heineken and Budweiser to drive growth and support margins at the top end. So it's quite competitive at the top end and the bottom end of the market.
Well, but let's look at Guinness Nigeria and what we saw play out in the month of March. We saw that huge interest from investors there. What, in your view, what do you think? What do you think is playing out, and is it sustainable?
Yeah, so investors had pretty much punished Guinness so much so to levels that seemed like the company was about to be liquidated or something. So it was trading at a deep discount to its actual valuation. We saw that it had a lot of upside from the levels that it was trading at. The situation is not that bad compared to what the pricing says. If you're looking at multiples, you're seeing that the stock was trading at one point at 1 times EBITDA, compared to an long-term average of about 9 times, which showed that something might have seriously been wrong. But I think right now what's happening is that investors have seen that the pricing, that the stock was severely underpriced, and they've now come in to correct that situation.
All right, on Nigerian breweries, though, your take also on the Scrip Dividend Election Scheme.
Yeah, interesting. This happened in 2016 as well. And the reason behind this is because of the FX liquidity crisis. I feel that with the parent company being Heineken, that company has to repatriate its dividends from Nigerian breweries back to its parent country. Unfortunately, the FX illiquidity in the market has hampered that. So as a result, the company, rather than buying shares in the open market, has resulted to issuing a scrip dividend. So it's essentially just the company putting those dividends back into Nigerian breweries.
Now, let's first now look at the sentiment we're seeing in the market today.
Yeah, so the market just managed to eke out a 0.02% gain. For most of the day, the market was trading in the negative. A lot of pressure from banking stocks. The big 5 banks were down at the close of market today. I think some late gains in some large caps, Nestle, MTN, flour mills, managed to push the market up. So I think the market is still, suffering from a lot of what's happening in the fixed income market. Yields continue to trend upwards. So investors see that, that it's more safe haven assets, and yields are looking a lot more attractive from where they were last year. So a lot of that is seeing some portfolio reallocation from equities towards fixed income.
But looking at the consumer goods space and performance today, though, I'd like you to look at, first, I'm still taking it back a little to the brewers as well there. In terms of volumes we're seeing play out, and how do you think they'll play out in the second quarter?
Yeah, Q2 should be very interesting for the brewers, especially with these price increases. So international breweries increased price last month, and NB followed. I'm aware Guinness did some price increases in Q1 as well. So this should show in the Q1 numbers that will be released next at the end of this month, rather. In Q3 and Q4 of last year, we did see some strong recovery from the lockdown period, and it's likely that we should continue to see that strong growth play out just on the back of those price increases. We shouldn't see too much of volume should slightly suffer, but I think the price increase should help support that, and we should see continued increase in revenue.